Welcome back, guys, to Forex Beginner's Guide video 102. Today's video is about what is a PIP. PIP stands for percentage in points or price interest point. It's the smallest price movement in a currency pair, helping traders measure how much a currency pair's price has changed. Think of it as a unit of measurement for price changes in Forex. Understanding PIP in XAU-USD. XAU-USD is most commonly traded gold pair in this industry, where XAU represents gold, USD represents US dollar. When you trade XAU-USD, you're essentially buying or selling gold against the US dollar. Now, unlike most other currency pairs, XAU-USD is quoted on two decimal places instead of four. This means XAU-USD, a PIP is equivalent to 0.10. How does a PIP work for gold? Here's the key difference. In typical currency pairs like Euro USD or GBP USD, a PIP is 0.0001, but for gold, it's 0.10, the second last decimal. The last one, even for currency pairs and for gold, is called a PIP. That's not the one that you want to have a look at when you're looking at a PIP move. For gold, is the after decimal, the number that's there, that's the pips which the gold has been fluctuating for. Now, for example, if you're looking to trade gold at 1800 and it jumps from 1800.00 to 1800.10, that's a 1 pip move. So in gold trading, pips are much larger in value of value compared to regular currency pairs, which is why movements in gold price can lead to larger profits or losses in a single trade. Now, how does a pip work in a normal scenario, a normal day-to-day trading basis? Breakdown number one. First price of gold, let's say you're looking to invest into gold for a buy and you're looking to buy at 1800. Now, when it jumps from 1801, that is a 10 pip move. So that means you've caught 10 pips in your favor. Vice versa, if it goes to 1799, that's a 10 pip negative against you. Well, on another structure, you can see as another example, XAUSD moves from 1800 to 1805. That's a 50 pip move. That's how you calculate pips when you are trading gold. Now, example of pip in action with XAU-USD. Trading XAU-USD price moves from 1800 to 1801. That's a 10 pip move, just as mentioned earlier. If you're trading with a standard lot size of 1.00, the pip value is generally around $10 per pip. So you're investing $10 in each direction when the pip goes in your favor or against you. So if the price moves 10 pips, you'd make $100 profit. And if it goes in your favor, that's $100 profit for yourself. If the price moves 50 pips, you'd make $500. That's how you can calculate the profit return on your pip calculation. The role of pips in trading XAU-USD. Since gold is a precious metal, its price is more volatile than typical currency pairs. The movements in XAU-USD are often bigger, so knowing how to calculate your pip value and manage risk is key to successful trading. That was the end of this video. We will be talking about the next topic in the next video, so make sure that you watch all the videos and educate yourself before you do anything in this industry.